management accounting or managerial accounting, and I'm your teacher Jamal. Today we will talk about the introduction part of the management accounting, and we will be covering chapter 1 of our preferred course book. So, you ready for the knowledge? So let's begin with. So beginning with the evaluation policy. So I will be structuring this course with 40% of assignments, 30% of midterm, and 30% of final. So please pay close attention to this 40% assignment because this is a big chunk and you will be heavily tested on the assignments part. So this video, I hope we are maintaining the size requirement. So if it's not according to the specified site, then I will upload it to the YouTube or other platforms and I will inform you. I have also set up a WeChat group. I hope you already got the email and you are already registered to my WeChat group, which is Managerial Accounting CIP 2020. Okay, to move forward. And regarding our preferred textbook, so for this course, we will be following Managerial Accounting by Garrison, Noreen, and Brewer, and we will be using its 13th edition. So I will be uploading the book chapters on the Blackboard platform and also on the WeChat forum. So you can also download it from either of the forum. Okay, so to move further. Okay, so before diving deep into the introduction part of our chapter 1, so there should be a logical question that should pop up in your mind, that why there is a need of managerial accounting, why accounting or financial accounting itself is enough. So to answer in a best way, I have pasted a very nice video explaining the need for managerial accounting, and I have included 2 videos, one video right after the slide and one video at the end when I'm gonna conclude our lecture 1. So let's begin with
growth of large organizations, which began in the 19th century. Many of these organizations, such as textile mills, grew by combining multiple production processes under one roof. Managerial accounting allowed managers to compare the cost of a process inside the firm versus purchasing the process from another firm. In the 1900s, Andrew Carnegie, founder of U.S. Steel, devised a cost system that reported detailed unit cost figures for material and labor on a daily and weekly basis. The system gave senior management tight controls on operations, as well as timely information on marginal costs for pricing decisions. Other icons of American industry were also active in developing performance measures. As the nation's industrial base grew, managerial accounting continued to develop, primarily influenced by taxes and financial accounting requirements. But things began changing dramatically in the last quarter of the century. Rapid advances in technology and global competition transformed organizations and prompted managers to question whether traditional management accounting procedures were still appropriate. In addition to applying and managing new technology, corporations also had to place new emphasis on quality. In the 1970s and 80s, as reliable, reasonably priced Japanese products began to take significant market share from American manufacturers, it was clear that the consumer put a high priority on quality. American manufacturers were forced to make quality job one. They began to adopt Japanese management practices, which ironically were introduced to Japan by an American, Walter Deming. Manufacturers, merchandise.
Well, I hope the video has already clarified many of the questions regarding why there is a need of managerial accounting. Okay, let's go to touch over chapter 1. So let me repeat it again. I already uploaded chapter 1 in our Blackboard platform and our WeChat platform. You are required to download from either of the platform. Okay, so our chapter 1 is managerial accounting and the business environment. So this chapter is basically serve two main purposes, and rest of the purposes like defining some concepts, they are secondary, and you are only required to go through only those concepts that we are discussing here. So in this chapter, it first explains the difference and similarity between financial and managerial accounting and the role of management accountants in an organization. Okay, regarding management accounting, so management accounting starts with the management, or the purpose of managerial accounting, it starts from managerial decision something. So in order to start explaining the management accounting, first we can define strategy, which is a game plan that enables a company to attract customers by distinguishing itself from its competitors. And strategies, as we have learned in our management courses, there can be product differentiation, there can be like cost cutting and niche marketing. It's like that. So these are all strategies which basically are applied to distinguish itself from its competitors. So here the focal point of a company strategy is its target customers. I really apologize for my drawing skills. I hope in the next video I would improve it better. Okay, after defining strategy, let's understand the work of management. Here one thing I need to tell you, that in principle of management, the main activities are 4, but this book basically combines these 2 activities, directing and motivating, as one activity. So the work of management is to plan, direct and motivate, and control. So let's see either of these 3 functions one by one. So the number 1 work of the management is to plan, which is an important part of the management process. So it is basically to identify alternatives and then to select among from the alternatives that does the best job of furthering the organization's objectives. And the last part in the planning, what we do, we develop budgets to guide progress towards the selected alternatives. So the question arises, who developed the budget? So normally budgets are usually prepared under the direction of controller, and who is basically the in charge normally, or the management, or the manager in the accounting department. So the next one is that what are the frequency of the budgets? Normally budgets are prepared annually, but you can also make the budgets weekly, monthly, quarterly, semi-annually as well. In order to plan